Okay, so if you are watching this webinar, it's probably because, well, you are trying to make sense of what's happening right now in the markets with oil and gas and gold and all the lies that are being said, especially with oil and gold, okay? And all the chaos around geopolitics and everything. And probably you know my name, Alfonso Moreno from Certified Airline Trading Community. And what I do is very simple. So I'm going to analyze some of the top oil and gas stocks together with Brent futures and to see what's going on, what happened prior to the war, during the war. And you're going to see that the obviously supply and demand is what matters here. Okay, so let's start with a disclaimer. Okay, you can pause the video and read it at any time. This is not like trading. Well, I'm not telling you where to buy, where to sell. You just need to know what you're doing. So this is just for educational purposes. Okay, I have to say this. So let's start. Okay, this is Brent. Okay, so we've got Brent here, and what happens here is this. I mean, most traders believe that oil prices move because of war. Now we know that, well, Mr. Clown Trump is invading Iran with the help of Israel. The reasons, we all know that probably, but it doesn't matter why he did it or not. We are talking here about what is expected from the markets. And the belief, I mean, it's, how is I say this? And most traders keep getting trapped because, well, when they are watching the news, okay, the market is already reacting to something completely different. So before I go, I'm gonna go over all these stocks, okay? Brent, gasoline, the ETF for energy, also XAUUSD, natural gas, then gold, the top 10 oil stocks, and the top 10 the gold stocks, okay? Oil and gas, and I'm gonna try to go over all these stocks with the supply and demand prism, the glasses on, okay? So to start with, okay, let's, and here on the left, we're gonna see this is a 12 months time frame. Nobody looks at these bigger time frames, okay, for on gold or Brent, okay? We do. Here this is a 6 month, the 3 months, the monthly, the weekly time frame, and the daily time frame, okay? And I have shared some of these analysis on my social media, YouTube, and videos and everything, and obviously a sort of a line trading community. So what happens here? Let's recap, okay? Let's take a look at the monthly time frame here, okay? So as you probably know, most traders do not pay attention to the bigger time frames. So something that is, I believe it's a huge mistake. Okay, so I believe that here, okay, right there. So let's go over Brent, what happened during the last couple of years, and then you're gonna everything is gonna make sense. Okay, so try to stay until the end because this is going to be very important. Okay, I recorded a video when price was there. Okay, expecting price to drop heavily. Why? Because there was a very strong area supply and control right there. And what happened over there in Brent futures and crude oil, light crude oil, is that we had that strong area supply. So here is the Ukraine invasion by Russia. Okay, this is where it happened. The beginning of 2022. Okay, February, March, I believe. And this is the price action we had. And what do you think, or do you remember what happened during that time? That they were saying, okay, the supply of oil because of Russia and the gas and everything, well, the supply wouldn't be as high as possible, then the oil prices would skyrocket. When you fill up your tank on your car, it would be super expensive, etc. And in Spain, at least, and in Europe, gasoline prices went up to 2 euros per liter. That was the highest ever. But what happened during the Ukraine invasion is that Brent dropped 50%. But oil prices were like, why? I mean, everybody's saying that Brent and the production of oil is being reduced because of the attacks and the gas and everything. You remember the story, okay? I don't need to tell you. And then instead of Brent going breaking higher and going above 102, about 50, sorry, it just went down. Why? Because we have a very strong air supply over there. And we take a look at light crude oils. We also, let me switch this to regular. This is the Ukraine's war, okay, reaction right there, okay? And I was talking about that at the moment. So everybody was saying that Brent was going to break all-time high, well, not all-time high, so to break higher. And that's why, well, there was an excuse that the petrol stations had the super expensive prices per liter in Europe, at least, and I believe in the rest of the world. Okay, so and we were saying this is going to happen, and from here it's going to react, and that is exactly what happened. So now going back to Brent futures, okay, we take a look at this. This is the 12 months time frame. Okay, it means that every single candlestick represents 1 year of time. So in this webinar, I'm going to analyze, that these stocks, okay, like I said, and we have to start with Brent because obviously Brent futures and light crude oil are highly correlated with all the oil and gas stocks, okay? So what happens here is that Brent reached that area of demand over there on the 12 months. And if we take a look at the website here, this says, don't forget the forum for Brent. At that time, January 13th, I will say 12 months demand in control, we are expecting this. And then price starts to rally, creates new areas of demand, okay, plays out new areas of demand, etc., etc. Another area of demand, trying to reach it, etc., etc. Okay, so this was predicted, obviously. I am not a fundamental analyst, okay, and I do not pretend to be. I don't care because everything is priced in, even wars. So what happens now? The war starts, okay, and it started like 2-3 weeks ago, like over here, I guess. But the demand level on the 12 months was already in control, and we were expecting this, as you can see here on this analysis that it did. Okay, there. We're expecting Brent to rally, and then everything that happened with the Iranian war and Israel and Trump and all this chaos that is being created geopolitically, okay, happened right afterwards. So what happened? On the way up, we start seeing new areas of demand. These were mentioned on the website, near them here, another one there, all of them played out. Here it fell short of retracing, another one over there, another one up there, which played out too. And now we've got a strong area of demand here on the monthly being created. But again, what do we have here now? We have this area of supply, which should be a little smaller, okay, right in control. So now we should be expecting Brent, hopefully, to drop. Buying after a very strong rally is not a good idea. Okay, we look at the strength of these price action, these large candlestick, very large candlestick. The body is about how much is that? 36, 37%. And the whole candle on Brent futures is like 58% in less than a month, in just 19 days in March 2026. Okay, so this is why Brent is rallying. The war is just a catalyzer. It's accelerating the rally from this area of demand. Now, what happens is that Brent, we have this classic resistance, which is not supply, has nothing to do with it. As you can see, when Brent prices reach the 112 area, 120, 125, look at these upper large bearish wicks, okay, the shadows, and price just drops from there. So we are expecting that to happen again. Not only that, because we also have that monthly area of supply. You follow what I'm saying? This is price action analysis for Brent futures. It will happen the same thing for WTI, for light crude oil. If we switch to light crude oil, we're going to have the same thing. We've got another area of supply right in control after a very strong rally. And you can see the upper wick, okay? Like 19% in the last, week, 9 days, okay? And this is happening during the war, okay? The attack to Iran, okay? So this is what we are expecting right now. So with this expectancy, okay, let me take a look also to RB, Okay, RB is the same thing. I mean, this is the RBOB gasoline futures, same level here, same classic resistance right there. Okay, these upper wakes force price to drop. So after a very strong rally on RB gasoline, RAOB, okay, we are expecting price to drop. So monthly supply wasn't reached yet, but it was reached on Brent. So the thing is this, when price rallies, and you should know that already, when price rallies a lot in one direction, it is not a good idea to keep on trading in the same direction. Okay, so breakout trading is not a good idea here. So after a very strong rally, we must wait for the pullback, not buying, fearing of missing out on this particular trade, which is Brent. So this is the war acting as a catalyzer with demand in control in the bigger picture. But the problem is that most traders ignore these imbalances in the bigger picture and they focus on, like if we go to Brent, we go to the 1 hour time frame, okay? And they start looking at the 1 hour and they have no idea now why price prior to the war, why is the 1 hour rallying and printing these huge gaps, okay? Creating these gaps in price. Why is that happening? Obviously, after the fact, you start like watching the news, and then you hear that there was an imminent attack. All this was being boiled and cooked for weeks and everything. But that's obviously after the fact. But as you can see, this was not after the fact. Okay, prior to the war, I didn't know, and nobody knew that the war was going to happen. Okay, the attack, but we did know that this 12 months average demand on Brent was in control. So we were expecting price to rally, and that is exactly what happened also on gasoline futures. Okay, so they are highly correlated. You know that. So if Brent has a large time frame demand level in control, well, price doesn't move because of the war. The war wasn't happening. Okay, price moves because of the supply and demand imbalances on the higher time frames. And once you understand that, everything starts to make sense, and that's why you are seeing these rallies. Okay, and so today, this breakdown using real charts, real price action for on Brent and oils and gas stocks provide you the context. If we probably you've heard about natural gas prices being too high and everything because of the war. I mean, I was reading that, I was saying, who is saying all this crap? Okay, because if we take a look, I recorded a very long video on natural gas about these 3 months areas of supply, like this one over here, this one over there. So can you tell me, you look at the chart, I mean, in the last few weeks because of the Iranian war, okay, in the Persian Gulf. So this is the last month or 5 weeks. Did natural gas price skyrocket? No, it didn't. So why are they lying? I mean, I don't understand why they're saying that. What happens here is that prior to the war, okay, natural gas hit that 3 months area of supply the same way that it hit that area of supply during Ukrainian attack by the Russian forces, by Mr. Vladimir Putin and all. Well, I'm not gonna say anything about it, but so this was during Ukrainian war, okay, attack by the Russians, and this is happening prior to the war, the attack in Iran, okay, and the attack happened like here when price was dropping. So natural gas is skyrocketing, the prices, blah 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 blah. What are you talking about, my friend? I mean, this is not happening. This happened prior and it was not rallying. It's not skyrocketing. Natural gas is reacting to this, the strongest bearish impulse, which is a supply level in a long time. Okay? As you can see here, in a long time. So what happens? And here, this imbalance that was created in natural gas in December 2008, it took years. It took from 2008 until 2022. Well, imagine many years. And then it hit the imbalance to the tick. Okay, the tick. I mean, how can that happen? I mean, I am not making this up. This is all on the website. I'm sharing all this here. I'm sharing everything. I mean, Papa, Jones, Litecoin, I mean, Coca-Cola, everything. That's all updated on the website if you're a member. So, but the thing here is that how can I, Alfonso Moreno from Certified Line Training Academy for Community, predict these movements with years in advance and look at the reaction to that area of supply and look at the reaction to this area of supply. All these were shared prior to these imbalances being in control. But obviously, if you are trading the smaller time frames and you go to the daily, oh wow, look at natural gas, okay? Prices rallying strongly. Oh wow, this is like a bullish gap. Another bullish gap. And then you rally, oh my God, I'm gonna start doing breakout trading, okay? On natural gas futures. But you are ignoring the largest impulse ever in a long time, in 15 years. And this is the result. You were looking to buy into bigger time frame area supply. You ignore this and you were trading futures or the intraday futures, buying, obviously you lost. That's the reason why you lost. Okay. So let me see if there is something here. I don't know if you are allowed to write any questions, but maybe I've got this not configured for that. One sec. I can see a couple here. Okay. So allow everyone to. Okay. Good. So this is natural gas, okay? And this is all happening right now during the attack in Iran, okay? So if we take a look at XLE, okay? XLE is the ETF from State Street Energy, okay? Sector SPDR ETF. So it's breaking all-time highs, okay? It's breaking all-time highs. And look now what we have here. We have a very strong area of demand on the monthly created over there. So does it mean that we should buy now? Well, no. I mean, we shouldn't buy now because after a very strong rally, we are expecting a correction. So buying right now, doing breakout trading on this ETF, okay, is not a good idea. So they are all of them, all these assets are highly correlated. And we take a look at XOP, okay, we have the same area of demand created over there, similar to XLE ETF. So these are highly correlated to Brent and crude oil futures, okay? So we take a look at XOP, what happens? If we do this, we are expecting the elimination of this area, which was like trying to play out on the 12th. I mean, for 1, 2, 3, 4 years, dropping, trying to drop, it dropped like 40%. And now look at the strength of this movement. During the first 3 or 2.5, well, 2.5 months of 2026, heading north towards this area of supply. So we are expecting the elimination of this area, which is why buying it's a good idea, okay? So, but not now, because we have this area of supply and control, which played out, okay? Until this area demand to control there. So these are all imbalances, which are usually made of very strong impulses, made of large candlestick bodies, but not all impulses are imbalances, okay? So, but all imbalances are made of strong impulses, like this one over here, okay? So this is what's going on with the energy sector. Brent, gasoline, XLE ETF, XOP ETF, and natural gas. Everything that is being said out there in the media is not what is actually happening, okay? So I trade price action, okay, and supply and demand imbalances, and I completely ignore fundamentals. You already know that, and you can see how these imbalances are playing out without ignoring fundamental analysis, okay? Because by the time it reaches these imbalances, everything changes. Everything is priced in, okay? News and everything you see in the media, because it's already too late if you're trying to buy now. Okay, the war started, prices like here. Okay, I should buy Brent. No, you shouldn't. Now you should be closing your positions because we should be expecting a bearish correction because the monthly supply has gained control. The same way that this monthly supply gained control in the past. during Ukrainian war, and look for not 50 more, because if we use this until here, it's like, yeah, 53%. So we must not ignore. So the war started here, one war started here, and another war started here. So now we could say that Brent futures is ranging or very high right now, very expensive at the beginning where the Ukrainian invasion started. Okay, right there. And this is where Iranian war started. So here's a war, and here's another war. Price dropped during Ukraine's war, because supply was in control, and price rallied. Okay, on Brent here, because the 12 months area was the demand level was in control, not for anything else. Okay, whatever happens afterwards, all these madness from Trump and all this, that's something completely different. It's just feeding the market, catalyzing, okay, and accelerating the process. That's all that is going on right now. So then the narrative was very clear. It's like the war, okay, starts, okay, like there, that a war breaks out, supply is disrupted, fear increases, therefore oil prices should continue to rise. Okay, no, it didn't continue to rise. That was the logical thing, and that was the narrative that you could hear in the news, at least here in Spain. But the fact is that oil prices dropped 52%. So the narrative was a lie. Okay, so everyone was suspecting that, but that didn't happen. Okay, the oil did not spike. It looked like the story made sense at the moment, but it didn't. So something happened that completely contradicts that logic, because oil prices didn't continue higher. So they actually dropped all that. Okay, so this is sometimes difficult to believe and understand. No, there are many other variables in play, obviously, not only price action and everything, but supply and demand, it rules the world, our economies and our civilization. So fundamentals were truly driving driving the market naturally, but this should have happened, but it didn't. In this case, what happened? 12 months average demand was in control and was trying to play out. Then the war happens and price starts to rally strongly. Okay, so that was like more logical. Okay, because what is the logic you see here? Okay, prices rallying, Ukraine war starts. Okay, Russia attacks Ukraine, the oil production is disrupted worldwide, the gas production too. So we were expecting this, the same way that we were expecting this, okay, during the the beginning of the Iran's war, okay. So this doesn't make sense. This does make sense. But anyway, it doesn't really matter, because supply was in control in the monthly, and that's why price dropped during Ukraine's war. And here demand was in control, and this is why price was rallying. And then the catalyzer of the war in Iran just helped price to rally much higher. So this is how you can connect the dots, okay, during or pre-war, during the war, and after the war. Whatever they say out there in the media is just a lie, okay, as you can see. So the uncertainty didn't disappear, okay? So why did price fell so strongly? Because supply was in control. So the answer is not geopolitical, it is structural, okay? We had supply in control. This is not resistance, okay? Everybody, you can imagine how many people contact me telling me, you know, you don't know anything about supply and demand, you don't know about Wyckoff, whatever. I mean, what are you talking about? I mean, I don't care who that Wyckoff is. Okay, this is a very strong area of supply. I mean, there was a strong supply over there, and it was rich and it played out. It was rich again and it played out. Now, new area of supply has been reached. We're expecting this to drop. Will it continue to rally? Probably, but I shouldn't be buying now with all this hype with the war. Okay, you missed the trade because you should have bought down there. You could have made millions. No, right now is not the moment to buy, because look at what happened in the past when we have strong supply levels in control on Brent and on gasoline and XLE ETFs and all these stocks. Okay, so So fundamentals are not driving the market. Everything is priced in. So the answer, like I said, is not geopolitical. It's just structural. So price reaches these areas, and it just reacts very strongly. Okay. So so regardless of the narrative, regardless of what analysts were saying, the higher time frame had already taken control, and we were expecting price to rally super strongly, and that is exactly what is going on right now. And this is the part most traders struggle to accept, because it removes the illusion that news, okay, news is what moves market. In reality, price reacts to institutional orders in these levels, okay, and that's what it is, nothing else, okay. And these orders were sitting on these imbalances, and those orders were already there long before the war even began. They just wanted to make money, driving the oil prices higher after eliminating these areas of supply that we were talking about on the website and even on some videos and in my social media. So, and this is it. Fast forward to what's happening now with the tensions involving the US and Israel and Iran, okay? The issues around the Strait of Hormuz. Probably 99% of the world didn't know where the Strait of Hormuz was. I did, fortunately, because well, I know the geography in the world. I mean, in Spain, we studied really hard geography. We know where almost everything is, okay? It doesn't happen in many other countries. So I know where it is, but now, I guess now it's very famous because it's like cutting the supply, okay, of oil to China and all these strategies that you are reading out there, okay, these conspiracy things, okay. So the narrative is exactly the same thing: fear, uncertainty, okay, fear, uncertainty, and suddenly the oil spikes above $100, and with that gasoline prices in euro above €2, no, everything feels logical now, but before in Ukraine's war, it didn't feel logical. And if we take a look at the bigger, I mean, and the largest, these are the top 10 uh, stocks in the oil and gas market, okay, by market capitalization. I just added them by order, okay. I just Google it. Which are the top 10? Maybe it's not the exact top 10, but that's what Gemini said, okay. So, and if we take a look at ExxonMobil, okay, this is very interesting, okay. So you can see now this is COVID. And I remember very well when the COVID-19 pandemic happened, okay, this area of demand was reached, and we were saying, instead of forget, okay, this is what we happen, where we're expecting, okay. You remember the airlines stopped flying. There was no place to like put the oil barrels anywhere. Light crude oil went like minus 40, something like that. And then this demand level took control, and look at the reaction. This is COVID in 2020. This is 2021, 22, 23, 24, 25, 26. Okay, so this is what happens when an imbalance in the bigger time frames gain control, no matter if there was COVID, Brexit, or alien life being presented to the world, which is something now Trump still wants to do. I think the government in the US bought a domain called aliens.gov, G-O-V. Insane. But well, this is everything to distract from everything that's going on with these Epstein files and everything. So the thing is, now all-time highs are broken. Yeah, but before that, we had this area of demand on the monthly on ExxonMobil. Price didn't pull back. It did pull back to this area. It did pull back to this area. And now we've got a brand new area of demand created on ExxonMobil, okay, at around $120 per share. So buy now, doing breakout trading for this particular oil and gas stock, well, not a good idea. After a very strong rally, we wait for the pullback. Strong rally, pullback, strong rally, pullback, strong rally. That's what we are expecting, okay? This is not very clear, okay? If we take a look at the second one, which is Chevron CVX, we've got another area of demand over there. There was another one over there that wasn't reached, but we've got another one over there, okay? Very strong rally. And if you have watched my videos on social media, you will see that most of the time when I say this is going to happen, it's going to happen. So buying right now is not a good idea. Could Chevron Corporation, this oil and gas stock, continue to rally? Of course, uppercase, of course. But it is never a good idea to buy after a very strong rally in price. So it is not a good idea to do it. Okay. So TTE, TotalEnergies, is a French company, I believe. We also have this strong area of demand over there. Very strong rally, 3 consecutive large candlesticks. So buying now, doing breakout trading is very aggressive. So, and you are going to see most of the oil and gas stocks doing exactly the same thing because they are highly correlated to the reaction that happened on gasoline and on Brent reacting to these area of demand on the 12th. So almost all the stocks you're going to see this type of reaction. And as I said, after a very strong rally on Brent with monthly supply level in control, like it happened in the past, the monthly supply level here that was created during Ukraine's invasion, that war. So Brent, buying Brent futures right now is not a good idea. So it is neither is a good idea to buy ExxonMobil after a strong rally on the monthly, or Chevron after a very strong rally on the monthly, or TotalEnergies TTE after a very strong rally on the monthly. Okay, it is not a good idea to buy, as you can see. Okay, so we take a look at COP, ConocoPhillips. What do we have? So we have that area of supply over there that took control, high, new high, dropped. Okay, this area demand took control, and now it's rallying again, and we are expecting its elimination, but not me buying right now is not a good idea because we have supply and control. But we are expecting its elimination the same way that it happened with all-time highs on TTE, TotalEnergies, and everything. So one of the biggest one, again, British Petroleum, okay, BP. We have these levels of demand on the weekly playing out, okay? And we've got another one here in the weekly. So we are expecting the elimination of this area of supply on the 6 months. On the 6 months, this area of supply, we were talking about this, and now with this impulse there, expecting price to rally, and that is exactly what happened. So what happens here is that obviously now you are looking at, you may be thinking, why is this guy analyzing these bigger time frames? Because this is where the big money is. And if you keep ignoring these imbalances, you are going to not understand why price moves. You are not going to understand the logic will not be like, why this is happening? Why is, like I said before, why is Brent dropping strongly and then the gasoline prices go like higher and higher and higher when Brent was dropping 52%? So it is because you are ignoring these areas of these imbalances, the large time frame imbalances. Okay, and this here, look, this is COVID-19. Okay, and this trade was called many years ago during COVID. Okay, look at the strength of this imbalance over there. So it took many years. So look at this. This imbalance was created during 2000, no, 94, like 22 years ago. Okay, 22 years ago. 22 years later, British Petroleum reaches that area of demand during COVID-19 in 2020, and look at the reaction. Okay, 201%. And like I said, this was called way before it happened. It was mentioned on the South Carolina trading community, and it played out. It is still playing out. So we are expecting price to rally much higher, okay, until it reaches this area of supply right at the top, okay? But after a strong rally on the smaller time frames, and the weekly is a small time frame if compared to the large time frames like the yearly chart, okay, we are expecting price to drop a little bit, okay? PBR, this is like the Brasileño, Petróleo Brasileiro, okay? Same thing, okay? We are expecting the elimination of this area of supply. It was tested during 2018, okay? Thank you, Michelle, okay? Michelle, I think. Sorry, the characters are so small, okay? And sometimes, I don't know if you are a man or a woman because you say Michelle, and here in Spain is very, I think you're a man. Okay. Okay, because Michelle with double L and E at the end is like a French name and also Spanish name, Michelle. So you're Michelle. Okay, good. Okay, I just wanted to break the ice because I was very serious. I'm not this serious usually. Okay. So Michelle, since you are writing here, I mean, this is crucial, okay? This is crucial. I mean, most traders ignore the bigger time frames because they want instant gratification. They want money now. They do intraday trading. They do futures on the 5 minutes and the 1 hour and everything because obviously trading the weekly on the futures is too wide, too expensive per pip and everything. That's crazy. But you are ignoring what's going on in the markets. I mean, by looking at these time frames and these bigger time frames, and you saw before PB, British Petroleum, you saw before Chevron, ExxonMobil with the 12 months area. Okay, thank you, Trevor. This is 12 months area of demand. This is this is why PBR, Petróleo Brasileiro. This is Brazil. Petroleum means petroleum. Okay, this is the company from Brazil. Okay, so this is why it's rallying regardless. And here within this rally here on the 12 months on PBR, this oil stock from Brazil, two wars have happened and many restrictions and increasing supply, decreasing supplies by the OPEC. Okay, and it is withholding. This is 12 months, the demand level. Look at the strong rally, engulfing patterns, and engulfing patterns, new highs on the 12. And this is heading like this. This is going to happen. This is a long-term position. You could say now, okay, I'm going to buy and forget about it. And in a couple of years, 3, 4 years, you will have probably double, triple your investment. That's simple. Okay. And you forget this is like you set your trade. This is why my community is called set and forget. You set your trade, forget about it long term. Okay. If you start now going to the 4 hour, 1 hour daily, and then obviously you're going to have more losses because the smaller time frames are not that reliable. They play out really well, but obviously, if you take a trade and you set your stop loss here, for example, when price was like here, okay, this is going to be, you would already double your investment, probably triple your investment, and you could quadruple, quintuple, I don't know how to say that in English, but 5, 6, 10R, okay? I mean, 10 times your risk or your initial risk if you protect your investment here and not at zero, okay? So Praka, after this, if time permits, please analyze Indian Nifty. I don't think we're going to be able to do that. This is not like a couple of weeks ago where I did a webinar, okay, where anything is accepted. This particular webinar, okay, is about oil, gas stocks, and gold. And look at all we have to look at, okay? So I just cannot mix all this, okay? I'm gonna try to do an Indian analysis, an Indian live webinar where I'm gonna analyze the major Indian stocks. So probably there. I hope to see you there, Prakash, okay? So I don't want to, I'm focused. This webinar is to do with oil and gas and all the manipulation that is happening in the world, in the social media, on the hype with the war, and it's irrelevant, okay? As you will see after this webinar, hopefully, and if you still don't believe me, okay, I'm sharing this prior to these reactions most of the time on social media. So next one, CNQ, Canadian Energy, okay? This is a Canadian stock, okay? And the same thing, another area of demand here on the monthly. So after a very strong rally, it's not a good idea to buy. Obviously, breakout trading is playing out. But when we see that, look at this here, Canadian CNQ. Now let me zoom out a little bit, okay? So you can see all this in context. So price action analysis on these oil and gas stocks, CNQ, Canadian Natural Resources. Look at this, strong rally, okay? Look at this, 1, 2, 3, large candlestick. Price action is crucial, context is crucial, location is crucial. What happens? After several months in 2022, September, this level is kissed, I mean, to the tick, and then it rallies. So now, can any one of you, you are not very talkative or very, you don't write too much, but it doesn't matter. I am used to talking alone, okay? So it doesn't matter. I just want you to understand this, okay? So that you don't fall in the trap of manipulation. So can you tell me if there is any difference between these two price action patterns here? Strong rally and all that. Is there any difference? I don't see any difference, okay? So if I buy here, couldn't this happen the same way that if I had bought here, this happened? Yeah, it's not different. So if you say, okay, my strategy, trading strategy for on stocks tells me that I should do breakout trading now. Why? Because it broke all-time highs, and now Brent is running strongly, and oil and gas stocks are running strongly. So I am a fear of missing out on this position. I'm gonna do breakout trading right now. Okay? And what happens? Price drops and you lose. Could it continue to rally? Of course, yes. But the higher probability is that you obviously, if by the time price is up here on CNQ, Canadian Natural Resources stock, okay, if by the time price is here, you did not take a position, you are too late, my friend. I mean, don't try to buy now and to be like the smartest trader in the world. Oh, wow, I'm not missing out on this trade because it's breaking all-time high and Brent is rallying and etc. And the war, my idol, Mr. Trump, is going to unblock the Strait of Hormuz. He's going to attack Cuba and blah, 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 blah. Come on. I mean, that's irrelevant. I mean, that's irrelevant. Okay, what is relevant is that these, I mean, all these huge investors and the big money has limitations on how they can plan trades. They just cannot buy with all their arsenals. Okay, why? Because if they do, they change the average price of the market and they will be filled like the average. Imagine they want to buy. Okay, they will start buying like here, there, stop buying. Okay, and now the average of buying in a cluster of orders here will be like here. But if they buy all at once, it will gap up and then the average will be here. And they don't want to buy there, they want to buy around here. So there's a limitation to these, the huge investors, okay? And the same here, okay? If you are a long-term investor, okay, who you should already be positioned, okay? You are not buying here. You bought here and caused this movement. Okay? So why should I buy here? I shouldn't buy there. I should buy when it returns here, not here after a strong rally. Because these guys do create these imbalances, even if they are aware or of or not. These institutions create these imbalances. You and me and thousands like our retail traders will not move the market like this. This is a combination, obviously, of funds, institutions, and the breakout traders, retail, everything. Fear of missing out, breakout trading, etc., etc., etc. Okay? So, but now I am late. I didn't buy here or there, or even smaller time frames on the daily and 4 hour, whatever. I'm late. I'm late. Okay? So let me read. Ever since you found your Telegram, went through all the information. Well, I am afraid that I do not have any Telegram group, and whoever is doing that is faking my ID. So I'm gonna say after that, till now, I've seen that supply and demand really works, and all this nonsense with the news, it's an illusion. Glad I found you now. Okay, so the people out there faking my courses and my knowledge, and well, claiming that they have created all this these rules, and I have no Telegram group, Michelle. So whoever is doing that, I know that people are selling my courses on Telegram groups and everything, but obviously reading a course is just reading a course. You will not understand if you don't know what you're doing, okay? It's like reading a book on English grammar, Chinese grammar. That doesn't make you speak English correctly or speak Chinese. So I'm afraid I'm not that guy. Okay, a EOG, okay? So this is another important company, EOG Resources. What do we have here? So, well, we have New Year's demand on the daily, etc., etc. So I'm talking about these imbalances on the bigger time frames, okay? Like this one in the monthly, so this one here in the monthly, a little bit wider. So I'm not analyzing, I mean, if you already paid attention to what I said about Brent after a very strong rally, and with supply in control, it is not a good idea to buy. So what happens is that now all these stocks that I'm analyzing, and probably there are hundreds of oil and gas stocks, okay, correlated to Brent futures, to light crude oil futures, to WTI, etc. They are highly correlated. So none of them will be a buy option right now. Why? Because all of them will be overextended. All of them will be rallying strongly, okay? And it is not a good idea to buy now into, like, this is like classic resistance, okay? Like at the top. And it is not a good idea, okay? So the thing is that none of these assets are like buy now. Why? Because we don't buy after a strong rally. That's another strategy. This is supply and demand. We detect the fingerprints of institutional buyers and sellers, and we wait for the pullback. And if it's still trending or whatever, I mean, there are rules for that, then we are allowed to buy or to sell. Okay? So this is why most traders struggle, okay, when they try to learn to trade stocks and commodities and Brent in this case, or even forex using fundamental analysis, because fundamentals give you, okay, a story, but price action gives you reality. Okay, the market doesn't need a reason to move. It only needs an imbalance. It needs one single entity, person, human being, robot, anything to move the market. And when that imbalance is on the monthly or even bigger time frames, it has the power to override everything else, including wars, Brexit, COVID-19, as you could see on the charts, economic data and central bank decisions. That information is useless because, what you like it or not, all these decisions of interest rates and FOMC and everything, okay, all these that forex traders use, all that is already priced in the market. Or don't you think that these guys are sharing that information with the big boys? They do. They are not allowed to do it, but they do, I'm sure. If you are my closest friend and we are having dinner at home with our wives, blah, 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 and I am going to decide that in 1 week the interest rate of the dollar or the euro, central bank, federal bank, whatever, is going to change, I will tell you, you will be positioned. I mean, you will tag your friend Zuckerberg, you will tag your friend Elon, and all this money, these guys are feeding on that privileged information. That's for sure. Man, that's for sure. And they do it on your face. Okay, that's the way it is. So, sir, request to analyze NG chart already analyzed before, Raju. So I did that already. It will be shared with you on a link that after this webinar is finished, I will send an email. So I'm not going to go back because I did it like way back, like half an hour ago. Okay. So let's take a look at the last one. Okay. This is Occidental Petroleum Corporation. And this is the same thing. Okay. 12 months area of supply and control, demand and control. Look at the reaction, similar to BP, ExxonMobil, Chevron, etc., etc., etc. And then what happens? 12 months area supply was reached and price dropped for 3 years, and now it's reversing. And this large candlestick on the 12 months is the Iranian war catalyzed by Brent's 12 months area demand being in control. Okay. So everything is correlated. This is a correlation between Brent, light crude oil futures, and oil and gas stocks, because they are obviously highly correlated. So what happens? We have this area supply eliminated, even the one over there, and we do have a brand new area of demand being created over here. So after very strong rally, it's not a good idea to buy. Okay, we need a pullback. So, and this is what happens with oil and gas during war. Okay, and we have seen. Let me recap a little bit quickly, because I'm going to go on I'm going to analyze gold. Okay, spot gold XAU and the consequences during war. Okay, because this webinar is about that. Okay, so what I was saying is that since Oxy is doing this, and since Brent is doing this, we should be buying. So this is a summary of what's going on with Brent. This is a quick summary, okay? Ukraine war, invasion by Russia, Vladimir Putin, okay? And this is what happened. Everybody was thinking it was going to rise the oil prices, and it dropped 52%. Now, Iranian war, 12 months area of demand in control. Now it makes sense because both are correlated. I mean, we have demand, which is bullish bias, and we have a war which increases fear, restricts production and the supply and everything, and then demand is override supply. This makes sense. Both are correlated, war plus demand. But here at the top, like I said before, on the monthly, this was war and supply. So it doesn't really matter if there's a war. What I'm trying to say that regardless of a huge geopolitical conflict like a war, an invasion to a sovereign country by Russia, okay, regardless of that, okay, oil prices drop 52%. That's it, okay? It has nothing to do with geopolitical. It's all about supply and demand and how expensive, how dear, how cheap something or the asset that you are negotiating with, you are trading is. As simple as that. And the same happens with gold, okay? Gold. This is gold chart, spot gold, which has been rallying for ages, okay? Breaking all-time highs for ages. I recorded a video about correlation with gold and everything what we were expecting, and we are expecting this. It's already said that on my YouTube channel, also on the trading community. Okay, so don't forget here. So the last update. Let me go here. Gold. So this is the last update. I'm saying that I am expecting elimination of this area of demand because we're expecting the dump in the bigger time frames. Okay, which already happened on silver, which is also highly correlated to gold. Okay, so this area of demand here, the same one that we have on gold, we are expecting its elimination. Then that an area of supply was created on the weekly, and we also call this trade, and price is dropping strongly. So what happens here is that on spot gold XAUUSD, okay, on the broker, we have these levels. We are expecting price to drop. Why? Because after, look at the 6 months time frame, gold rallied how much? 46%. This is insane, okay? This is another perfect example how the narrative, okay, can completely mislead traders. Right now, everywhere you look, okay, you hear that China is buying gold like there was no tomorrow. The central banks are accumulating gold, and the gold is the ultimate safe haven. That's what you will hear everywhere, okay? It's like you hear that, what do? You buy, isn't it? In a smaller time frame, you buy. Because obviously, if China, Jinping, and all these, well, Alibaba and the thieves, all these guys are buying, then why shouldn't I buy with them? Well, because you don't have the resources, my friend. I mean, this is a completely different methodology. They are not doing that for trading. They are doing that to manipulate, to control the resources in the world, okay? The United States wants to control the oil and gas in the Middle East and in Venezuela and everywhere. So China wants to control gold resources, probably. It doesn't really matter. We're here to try and make money, and one of the ways of making money is preventing unnecessary losses. So we are expecting this because after a very strong rally, okay, price should do this. So Michelle, I'm on gold, sell from 5,320 as was predicted, still holding. That's great. I guess that's this level. I don't know. Yeah, I'm there. Yeah, I don't even know which are the prices. Why? Because I just draw the imbalances. And if you take a trade here, you protect it there, and you would have already, like, if I do this, oops, sorry, I made a mistake. I'm going to extend this. 1, 2, you already tripled your investment if you have gone short there using CFDs or whatever, okay? So we are expecting this. Will gold continue to rally higher? I doubt it. I doubt it. Could it continue to rally much higher? Of course, anything can happen, okay? Anything can happen. Even that tomorrow I wake up in the morning and I am a transsexual and I am a woman. Anything can happen in the world. Okay, so uh, so we are expecting this. Okay, we are expecting this. So since we are expecting that, that doesn't mean that we should say, okay, I am late. Alfonso is saying that gold spot is going to drop here. Okay, so I should buy. Sorry, I should sell now. No, my friend. Alfonso is saying that this is we expect this to be eliminated. Yes, but that doesn't mean that it's going to happen now. Okay, this is demand. Okay, and quite strong, and the reaction was quite strong. This could happen. Price rallies, you lose because you sold, then it reacts, it reaches that area, and from there it drops. Okay, you lost. Although you were right and we were right about the final direction of XAU, of spot gold, okay, that doesn't mean that you can and should buy now. Okay, hope that you are following what I'm saying. Okay, so what happens is that, well, when you look at the gold from price action, supply and demand perspective, we can see something very, very different, as you can see there. So this has nothing to do with Brent futures. Brent futures has supply and control and everything, and here there's nothing because this is all-time high. There's no history on the left. So we now base our decisions on gold for intraday, short-term, swing positions, based only on price action. And by reading price action, we become the psychologists of the market. I mean, every single candlestick represents all the buyers and sellers in that particular moment in time, every 6 months in this case. You can see here that we have like larger candlesticks, bodies, okay? And now the body is very weak. And at the end of June 2026, we could have like a shooting star or even a larger bearish candlestick. And that would dictate that this is going to happen, okay? It could happen even faster than that. So, and this happens because gold is overextended. But if you take a look at the daily time frame, this is daily time frame. So does the daily time frame, can the daily time frame on gold spot tell you that this is going to happen? No. You see, I mean, this is like a normal chart with new highs, now low, high, low, low. What is going on? I mean, you cannot see the context, okay? You don't know what's going on. A single time frame is not enough to make a trading decision, and the daily even daily is like the largest time frame that most gold traders will ever look at. So trading using supply and demand imbalances is completely different because it allows you to anticipate where price is going to react to based on the bigger time frames, on multiple time frame analysis. So you can anticipate where gold prices, spot gold, is likely to react before it gets there. As one of the attendees said, he's short from there because he saw this level where probably was discussing this. He saw that one, okay? So, and it's playing out. So you are, by analyzing supply and demand and the context, you are like no longer chasing the market. You are waiting for it to price to rally here there, and that changes everything in terms of patience, discipline, and consistency. Okay, so trading is not about predicting the future or reacting to headlines. It's about analyzing price action, and price action is the only non-lagging indicator or oscillator. When you see a candlestick that closes on the daily, on the monthly, on the 4 hour, and the 1 hour, that's it. The price closes and it cannot unclose like moving averages and other oscillators. Okay, so since we are expecting this on gold, what do you think is going to happen with all the gold and silver stocks, which are highly correlated? Obviously, the same thing. The same thing. It's the same thing that we saw on Brent and oil and gas. So during the war. So during the war, I mean, is the war affecting gold safe haven? Probably yes. Maybe not. I don't care. I don't care. What I do care is that we are expecting this, and it is we can predict these movements with a very high degree of accuracy. So that's what I want to learn, price action coupled with supply and demand. Yes, that's what I do. Okay, that's what is taught at certain line trading community. Also, we share these type of analysis on a daily basis. So the thing is this, we're expecting this. So let's take a look at these stocks. The first one is Newmont, NAM. Okay, so what should we expect? Look at this. This is what we are expecting. After a very strong rally, we are expecting this. So if imagine this is let's say this, okay? Imagine anyone here on the room, imagine this is the 1 hour time frame, okay? And you see this candlestick here, okay? What do? You buy in using 15-minute, 5-minute here? No, you don't. So regardless of the time frame, price, there is one thing that we can call the fractality of price. Whatever happens in a small time frame for intraday trading on gold and stocks and everything, or for scalping, whatever happens in the smaller time frames can be extrapolated to the bigger time frames and vice versa. So look at the strength of this candlestick, okay? A bearish pink candle that could become, for now, a shooting star. After a very strong rally, shooting star. It's all about context, my friend. This is what we are expecting on Newmont, okay? Which follows suit what gold spot is expected to do. What we expect from gold spot. And it is highly correlated because Newmont is like number one, I believe, market capitalized stock with 106 billion in market capitalization. So Newmont on gold, regardless that China is buying all the oil gold resources in the world and probably from planet Mars, Pluto, Saturn, Jupiter, and from Andromeda Galaxy, okay? Regardless of that, we are expecting this, okay? AEM, Agnico Eagle Mines. Look at this pink candle over there. You want to buy? Imagine this is a 1 hour time frame. No, you don't buy. So what happens? We were expecting, look, I drew this a couple of weeks ago. This is gone, my friend. That demand level is eliminated, which is exactly the same area we can see on gold spot. And we are expecting its elimination. I'm going to draw an X here, which doesn't mean there is a treasure here. I'm not Captain Sparrow, okay, trying to look at a treasure. This is what we are expecting. Elimination of that area, the same way that it happened on Agnico, AEM. Why? Because after a very strong rally, we are expecting this. Breakout trading strategies are useless in these scenarios, okay? It was good there, now it's not good because we are expecting this. And then B, Barrick Gold is also a very important one. So what do we have here? So we have this same thing. After a very strong rally, look at the 3 months. Look at this bearish candlestick, okay? It is not a good idea. This is black, red, whatever you want to call color you want to use. Black, no, this is what we are expecting after a very strong rally. No way, okay? So I'm reading now on YouTube morning. Yes, what about dollar yen now? Well, my friend, this is not about forex. This, okay? Can I trade small time frames as scalp? Of course you can, my friend. But remember, this is not about forex. Okay, I'm gonna do forex webinars. I'm gonna do crypto webinars. Sorry for the delay answering, but I was broadcasting to YouTube, and it is now that I read your messages. So this is not about Indian stocks. This is about gold stocks, large time frame analysis, prediction, to debunk what is being said in the media about oil prices going to higher prices, well, being more expensive because of war and all that is true, but it is because demand took control. So on WPM, okay, we are going to see the same thing. Look at the 12, look at the 6, look at the 3. This is very, very bearish. Okay, no way we should buy. On more FCF, Freeport-McMoRan, McMoRan, the same thing. We are expecting the elimination of this area of demand here. Okay? Why? Because after a very strong rally, look at the bearish price action. Price action is crucial. Price action trading. We also have classic resistance on this particular stock. Okay? After a very strong rally, unable to close on the 12 months, on the 6 months and everything, and look at the pink candle over there. And this candlestick is only 2.5 months old. Okay? 2.5 months old. So this is going to happen on FCX, Freeport-McMoRan. Okay, so on Goldfields, okay, GFI, we are expecting the same thing. And as I said, this is highly correlated to gold spot. We are expecting this, and then all the gold and silver stocks which are highly correlated will follow suit, will do exactly the same. Okay, so when does it, somebody wrote something here, when does it happen if the price, what is it, the 3 months gold, weak shadow, prints on a strong uptrend, the price, especially in the weekly time frame, will close the week before falling back. I do not quite understand what you are trying to say there, my friend. The price, especially in the weekly time frame, then you say the price again would close the week. I don't understand what you're trying to say. Sorry. If you can't explain with other words, I'm not sure I can understand what you're trying to say. Sorry. So I will read your message if you add some extra information, but in the meantime, I'm going to continue. Okay. So we're expecting this one too on AU. Well, you're going to see that, I mean, analyzing all these gold stocks, okay, it's like analyzing gold spot. It's the same thing. We are expecting the same thing. So if you are an option trader, you can use long-term options, leaps to sell all the way down and forget about setting your stop loss and everything. It's just a long-term short position. No matter what they say out there on media, no matter what Trump is going to do with Cuba, Iran, or the dark side of the moon, because this guy is like wanted to attack everyone in the world, okay, and in the universe. So, okay, when we have price action, which indicates that there will be an uptrend on higher time frame and the imbalances to take trade on, let's say, daily execution time frame, well, that is a very long answer. I mean, there's no time to do that. It requires multiple time frame analysis, price action expertise. I mean, it's not something like I say, do this in one line. Okay, it requires a lot of explanations. Okay, so it's very difficult to explain that now there. So you are talking about specific daily time frame, what is required for taking action. It's like a lot, okay? Difficult to cover this in a webinar. It requires a few hours of explanation and examples to understand the logic behind this, okay? So on Franco-Nevada, FNV, well, same thing. We are expecting price to do this the same way that it happened in the past. So again, we have like this area of demand here in the weekly. We are expecting its elimination. Bye-bye. We've got another one here. We are expecting its elimination. Bye-bye in a few weeks. Okay. So Alfonso, after the weekly demand eliminator of gold, yeah, you can use 4 hour, sell daily. Yeah, it depends on, you need to grade to score the quality of these imbalances. If we take a look at XAU, let me take a look at this. How would you score the quality of this impulse? Okay, your name is Nima. Okay, you are on YouTube. Is it strong? I mean, is that impulse strong and stronger than the previous bullish impulses? Yes or no? I believe it is very strong. Okay, very strong. So and this is against the trend. Remember, this is counter trend. But in order to go counter trend, we need really strong levels and we need context. We need context. Okay, if by using the daily alone, you wouldn't take or make the decision to sell spot gold there. because the daily is not enough. You need bigger picture. Okay, what is the bigger picture telling me? If you start listening to news and fundamental analysis and fundamentalists, okay, we are talking about religion now, but I'm just joking. Okay, if you listen to fundamentalists, you're lost, my friend, because you will not know what's going on. Okay, so this is very strong in the context of a dump. I mean, everyone making a lot of money, okay, need to realize profits. Otherwise, it's just unrealized profit. And unrealized profit is nothing. Unless now that I heard that in the Netherlands, in Europe, in the heart of Europe, these I'm sorry, these guys are crazy. Politicians should be, I don't know, I'm not going to say any hard word because oh my God. I mean, you have to pay taxes on unrealized profits. That's a law that was approved recently, like 35%, I think. If you imagine you are holding a position and you are making $20,000 on gold and you do not close your trade. So that is unrealized profit. Well, Netherlands will make you pay taxes on that unrealized profit. That has been approved. And that is insane. Nobody's going to do anything about that. Nobody's going to hang these politicians and send them to Guantanamo, okay? So Trump can take care of them. I mean, it's just insane. I mean, this is crazy. I mean, the world is upside down, believe me. I mean, it's just insane. So Franco-Nevada, we were taking a look at Franco-Nevada, okay? And the last one on the list is PAAS. And as you will see, it is exactly the same thing. Analyzing gold spot will tell you everything. Because gold, okay, spot is, and futures, and GLD will be the same thing. GLD is the ETF, okay? So GLD, same thing. We are expecting this on GLD, okay? So the weekly demand level, look at that. The weekly demand level has been overshot probably by a tick. Let me use the trading view tool that tells me, yeah, it's been traded through by 0.06%, 24 ticks. So that level was eliminated already as expected, and this happened prior to spot gold weekly demand level being eliminated. So we are expecting this to be eliminated too, okay, as it is happening on all the gold and silver stocks because they are highly correlated. So no matter what Trump or Bibi Netanyahu or these terrorists or Islamists or whoever, it doesn't really matter, Hamas, doesn't really matter. All this is noise. What matters here is price action and supply and demand, because we are really good supply and demand traders when it comes to real life scenarios. When you're going to buy a car, a house, a pair of trousers, some meat, water, you know very, very, very well when something is expensive and something is cheap. Okay? So, but when it comes to the charts, we become stupid. Uppercase, stupid, very dummy. Okay, because we do not distinguish. We cannot make a difference between when something is very high or something very expensive or something is very cheap. We just don't see it because we are driven by instant gratification. Okay, in our lives, we don't have money. Okay, we ask somebody for that money, or we go to the bank and get a loan from the bank, or we use other third parties to get that money because we want something now. If not, we get a credit card or a second credit card, a third credit card, anything. We want something now. And in trading, that doesn't work. That's why most people lose, because they use the smaller time frames for instant gratification. They want like to double their accounts in overnight. Okay, and that doesn't happen. And there are traders out there and coaches out there, fake gurus that are like, one of them was giving away a Lamborghini to the best students. Come on, who believes that? Who does that? How can anyone believe that in the 21st century? I mean, come on, guys. I mean, this is just insane. So these rules can be applied to the smaller time frames too. Okay, and this is can be extrapolated to a smaller time frame, but that requires a lot of screen time. And if you are probably a teenager and you have a lot of free time and your parents are paying your bill and everything, okay, you can afford that. You can do that because you have a lot of time. But if you have a part-time job, a full-time job, you have family, children, job, you have to cook, you have to take your children to classes, etc., you don't have time to spend like hours and hours in front of the screen, okay? Because you're going to lose your children, your house, your car, and your life, and your money. Why? Because that's what trading does. Trading is addictive and it will destroy your life. As simple as that. Okay? So, like I said, this is a thing that it's pretty clear what we are expecting on gold spot futures and gold spot. Okay, and what we're expecting on Brent and why we're expecting that, regardless of what's going on in the world, with regardless with the geopolitical scenarios that are happening, unfortunately, in the world right now. The sovereign countries are under attack for various purposes that we will never know. We can only speculate. And thanks a lot for this information we're giving. Makes sense. Really appreciate it. Thanks a lot, Suzanne. And if you want to take advantage of these trade ideas and everything, well, you are free to join us here. I mean, this is Don't Forget. Okay, here we have the education, we have all the courses here where you will be able to learn supply and demand, how to use it on intraday, how to use options to trade stocks with smaller risk, much smaller, how to detect pump and dumps like the ones we're talking about. And this is like for oil and gas. So these are the courses, okay? And obviously the trade ideas we've got like here right now, trade ideas like this one on Comcast, expected price to drop, and these are shared as they happen, okay? So hopefully you now have a better idea why any geopolitical scenario in the world is useless, okay? It's just good for media to manipulate the markets and the minds of people who are afraid of taking action, okay? So thank you for attending. I will be sharing with you the video soon, in a few hours, once it's uploaded to the YouTube channel and processed. And I will try to do a webinar like this once a week, so we can analyze other markets. And probably the next one will be on forex and Indian markets too, because this can be applied to all markets. So have a great day, and thank you for attending and for trusting me. Enjoy. Have a great evening, morning, or afternoon, depending on which part of the world you are. Have a great day.